Hello, amazing traders. Welcome back to my YouTube channel. My name is Emmanuel. On today's episode of Chat Talk, which is our episode 7. So, if you're just joining us for the first time, you're welcome to the YouTube channel. Make sure you subscribe. For those of you who have been following me for a long while, I'm sorry for staying away for a long time now. I've been busy in arranging some certain things. I've been busy fixing some certain things that is going to benefit the both of us. So, as you guys know, on our chat talk episode, we always talk about forex pairs. We analyze it, we break it down with our simple strategy, which is the top-down analysis, and which is the best strategy to analyze any market. So, what we do on chat talk, for those of you who are just joining us newly, we just bring out forex pairs, we analyze, we predict the future price of those pairs, and we also trade it as well. But on today's episode of Chat Talk, we are going to be doing something different. We are going to be doing something different from forex pairs. We are introducing, or I am introducing something new to you guys. So we'll be doing something new. So if it's the first time you're joining us, make sure you subscribe. If you have been following us and you haven't subscribed, please do so. Before I continue with introducing what I have for you guys today, I want to talk about our last trade we analyzed about as in around that kind July or August, if I'm not mistaken. I think July, which is NSD USD. We have been holding that trade since July till now, and we have been in profit on that trade. You guys know how I trade. I don't rush trades, I don't chase trades. All I do is wait for the trade to come to me, then I strike immediately. So since July, I've been holding that trade. Most of you who followed me, most of you who executed with me are also in profit. We've been holding that trade for months now, and it's still yet to get to our TP. This is why I said using top-down analysis is the best way to trade for us. It gives you peace of mind. Just imagine, I've been holding a trade for over how many months now, and I've been doing anything I want to do freely without even panicking, without even thinking. I only come at the end of the week to check if the trade is going well. So literally, the market is working for me. I'm not working for the market. I don't wake up anymore every morning, open my laptop to analyze. No, I predict the future price, I analyze it, I execute it, then allow the market to work for me. So that is how you should be trading if you're a trader. If you're an investor looking to invest in a trader, these are the kind of trader you should invest in. Traders who are not chasing the market, traders who are not always on their screen. If you're always on your screen, trust me, you're not profitable. I don't think people who are always on the screen as profitable traders. Those who are less, they are not even on the screen too much, makes money more than those traders that's always on the screen. So guys, enough of that. We are in profit on that trade. So before I introduce what I want to introduce to you guys today, I want to give a little advice to you guys. And what's that advice? I want you guys to know that change is inevitable. In anything you're doing, be ready to accept change. In any business you're doing, be ready to accept change or be prepared for change, because change will always come. And when that change comes and you are not ready to accept that change, you'll be left behind. You will be totally left behind. So in anything you're doing, be prepared for change. Like I say, change is inevitable. It will always come. It will always come. You just have to be prepared for it. You just have to keep your strategies ready for it. So what I'm introducing to you guys today is stocks. I'm going to be teaching you guys what the stocks market is all about, what you need to know about the stock market, and how to invest in the stock market. Don't get me wrong, I'm still a forex trader and I will always be a forex trader. But there's one thing that gives me confidence. What gives me confidence is my strategy. My strategy allows me to trade forex pairs, and my strategy always also allows me to trade stocks, analyze stocks. So you guys can see the power in the top down analysis. You can use it to break any market down. You can use it to analyze any markets down. So my strategy allowed me to understand stocks more. My strategy also allowed me to analyze stocks and know which stocks I'm going to invest in. Meanwhile, when it comes to investing in stocks, we are going to be analyzing and we are also going to be looking into the fundamentals. You understand? In forex, I don't look into fundamentals. I just analyze. I just use technicals only. analyze and I'm always right. So if out of 100% and oh, I'm 97% right every time. So when it comes to stocks, we are going to be looking into um, fundamentals because we are investing into businesses, businesses that can go south tomorrow, businesses that can also do well tomorrow, businesses that have their own problems, they have their own issues they are facing. So we are going to analyze them technically. We are also going to analyze them with their fundamentals, with their financial reports. That is to say, we will be very more conservative when analyzing stocks. The stocks market will be very more conservative more than the way we are in when we are analyzing forex pairs. Meanwhile, we are very conservative at that, but we will be very more conservative now that we are also analyzing stocks. So before I go on, I just want to differentiate forex and stocks with you guys so you guys can fully understand what we are going into. So first of all, forex is a leverage trading. Why do I call it a leverage trading? You are allowed to even you are given a leverage to risk more than what you are allowed to risk. You understand? You are given a leverage to take $1,000 to $100,000. You're giving a leverage to take $10,000 to $1 million. You are giving a huge leverage to do that in forex. But when it comes to stocks, you don't have those leverage because stocks is not a leverage platform. It's not a leverage system. Stocks is all about investment. So what are stocks? First of all, stocks are portions of companies that you are allowed to own. For instance, a company lists their stocks for you. What they mean is this portion of their company, they are giving it out to the public to own it. So if you are buying a stocks of a particular company, you also own a share of that company. So every company, most companies list their shares. We have New York stocks, we have US stocks, we also have Nigerian stocks and the rest. So these companies have brought out their shares out for you to buy. So it's more like investments. But when it comes to forex, you are trading. So when it comes to stocks, there's nothing like stop loss. If you're investing in stocks, you don't have a stop loss. You only buy the stocks. But if the stocks should go south, maybe for instance, you bought a stocks at 5 naira. Let's use that for example. The stock is currently at 5 naira. For those of you who are not Nigerians, I use naira to explain like a currency, our currency here in Nigeria. So when you buy a stocks for 5 naira and the stocks go down to 0 naira, that is when you're going to lose your money. But when you buy a stock at 5 naira, maybe the stock does go below to 3 naira. Later on, the stocks come back to 5 naira and even go above 5 naira. You have made profit. So when it comes to stocks, there is risks, but the risk is not that much with the risks in forex. So you are investing, you are not trading, you are investing. But when it comes to forex, you are trading. Another thing with the stock market is that you are able to, or you are allowed to diversify. You have that flexibility to diversify. You may decide, okay, I'm buying Nigerian stocks today. After buying Nigerian stocks today, tomorrow I'm buying US stocks. You are allowed to own as many stocks as you want, so far you have the money to own them. Another thing about stocks is that we have safer investment when it comes to the stock market because the stock market is very large. The stock market is also a big market, and meanwhile, stock market, the market cap of the stock market is bigger than the market cap of the forex market. So I'm not trying to downgrade forex, or I will always trade forex and I'll also always invest in stocks. So there are also safer side when it comes to stocks. There are also places that okay, you don't want to, because trading it, investing, like what I mean by buying the stocks and keeping, waiting for it to rise is one of the most risky parts of investing in stocks. So there are also other safer ways you can also invest in stock market. You can also invest in companies. So what we have dividend. You can decide to buy dividend. Maybe every quarter you are giving a share of the profit that company is making. That one is more safer because all you just do is give your money to the company, then every quarter they give you back your profit. They give you profits, maybe sometimes 0.4 for I'm sorry, 0.4%, 0.6%, 0.7%, some 0.8%. You just sit and wait for returns. But if you should buy those stocks and keep with your money, buy it and keep with your money, there's a possibility that that stocks may rise. Okay, for instance, let me take you bought a stock for I'll also use 5 naira as an example here. You bought a stock for 5 naira, you used 100,000 to buy the stock for 5 naira. You understand? If that stock should rise to 10 naira, you've made 100% of that money you invested in that stocks, because 5 naira to 10 naira is additional 5 naira on a 5 naira. You understand? So that is 100% return on investment. You have quickly made 100% return of the money you made. You understand? But when it comes to dividend means like the profit the company made in a quarter. So okay, maybe this quarter we made 0.4% profit, we made 0.5% profit, we made 5% profit. You know, they are going to give you your money based on the money you invested in. For instance, you invested $100, so they are going to give you 0.4% of that your $100. They're going to give you 0.5% of that your $100. That is like how dividend works. So the other one we have ETFs. What are ETFs? ETFs are, companies joined together to form one stock. So, for instance, five or let me say S&P 500 as an example. Those of you who know S&P 500, you can also go check if you don't know about S&P 500. You can also go search about S&P 500. S&P 500 is 500 companies join together to form one stocks. So that is an ETF. You can also buy ETF. ETF is more safer and more strong, but there's also risks in it, because I'm not going to lie to you. I'm not here to sell lies to you, because in every one you're doing, there are also risks in it. You understand? It depends on the one you choose to, because everybody have their risk appetite. You understand? Everybody have the kind of length they want to risk to. You understand? So it depends on the one you are satisfied with. You understand? So ETFs are more safer. You buy ETFs. ETF reduce the stress for you. You understand? ETF reduce the stress of you buying the stocks. You buy Apple. You go to buy Amazon. You go to buy Alibaba. You go to buy ETF. You just need to just buy one, and you've buy it all. You understand? You just need to buy one, but ETF are more expensive though. You can just buy a portion of the ETFs. You can just Some ETF are around $5,000 for one shares, $6,000, even close to $7,000. I think the S&P 500 is going close to 7,000 dollars. So ETF are expensive. So another place you can invest it is bonds, government bonds. So this a I'm going to do a total video explaining all this in the like each. I'm going to do a video for ETFs, but I'm going to do a video for bonds, explaining breaking it down for you guys. But today I'm just going to be getting little information about them to give to you, so you could understand what we are going into. So another one is bonds. Government bonds. What are government bonds? Government bond means the government borrowing money from you, maybe after collecting tax. There's a budget they need to accomplish, and they don't have enough money to accomplish that budget. The government brings out bonds, you understand, for people to invest in. So once they bring out bonds, it means that you're borrowing money to them. So after doing those investments that they want to do, once they make profit, the government is going to give you back your profits of the bonds you invested in them. So maybe they do it quarterly, they do it 6 months, I think quarterly and 6 months, but I'm still going to get more details about that to give to you guys, so you guys can understand about it. But first of all, we are focusing on buying stocks. So what we'll be doing more here is analyzing stocks, know the stocks that we are going to buy, and I'm more interested on the cheap ones, because I believe nobody wants to go and buy a stock that's already at $3,000 per one, a stock that's already at $5,000 per one. You understand? I'm looking for the cheapest one. We analyze it, buy them when they are still down. So the one thing with stocks, one thing I want you guys to understand about stocks is you may be investing in stocks, I may be investing in stocks. We may invest in the same stocks, but our profits are not the same. I may buy early, you may buy late. I may be getting 100% return on investment. You may be getting a 20%. You may be getting a 30%. I'm not saying it's bad you getting 30% because 30% is a huge return invested for me. You understand? So the earlier you buy, the more profit you make. That is one thing with stocks. And stocks, another thing I want you guys to understand is stocks is not like land. When you buy a land, if you want to sell the land, you have to look for a buyer, you have to bargain with a buyer before you sell your land and the rest. No, stocks is very easy to sell once you are trading with a stockbroker. If you want to sell your stocks, they are going to liquidate it for you and give you your money immediately. So it's very easy. It's very easy to, sell. It's also very easy to buy. So more we are going to be doing on our chart stocks is analyzing forex pairs, analyzing stocks, knowing which stocks we can invest in, knowing when to invest in it, and also knowing why we are also investing in it. So it's very, very important. Like I said, we will be very, 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 very conservative when analyzing stocks. We are also going to be more conservative if we are analyzing the forex market too, because the forex market has been dull for months now. I haven't gotten any trade apart from just one trade I've been holding for months. I haven't seen any opportunity in the market. So, like I said, always be ready to welcome change. I saw the need to go into the stock market. The change came, and I was also ready for the change. And I also have a strategy that was ready to implement that change in myself. And we are going to implement that change in this YouTube channel. So if you are here and if you watch this video to this extent, make sure you subscribe because I'll be dropping a lot of videos, a lot of investment opportunities, a lot of value that could help the both of us.